So the market has been pretty hot last week. And if you take a look at some of the statistics for the week to date sectors, you notice that every single sector is in the green except for the financial services. And we'll get into that. Why is the financial services the only sector that's on the red?
Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description.
Now, if you take a look that there's only two sectors that have grown a lot. Number one is healthcare, and number two is technology, and we will go into that later. So you can see a few companies that went up quite a fair bit. On average, you can see it's about roughly 25% in just 5 days. So you have companies like JF Technology, Supermax, and also Penta Master. And if you take a look at some of the developments, JF Tech actually announced that they are going to be selling their products in the US by January 2025. So if you didn't know, in the past, they were actually under a court case with another company in the US, where basically there's like a patent infringement. So right now, I think the court case kind of like settled off already, and they have the ability to sell back to the US. Now, what's interesting is that JF Tech actually collaborates, or they are working closely with Huawei. So I wonder whether this will actually impact the selling in the US. But I'm pretty sure they kind of like figure out what they can sell, or I don't know, maybe in the future there is some unforeseen restriction in certain parts that they can buy from China or sell to US. But that's for GF Tech. Supermax, the news, you can see that they climb because there's an earning potential of US facility amid efforts to boost glove production. I think this news has been going around for quite some time already, that it is a known fact they have a glove production in the US. But somehow the market seems to be like reigniting this news again, and hence the share price kind of like rebounded back up. Probably also is because they are coming from the low base. It's quite like an all-time low, so any positive news kind of like creates a huge bumper in terms of share price. And if you see, the share price of Supermax went up 26% in just 5 days. And last but not least, we have Penta Master. The share price jumped 23% on trading halt of their Hong Kong unit. So if you didn't know, Penta Master actually has a dual listing, one in Malaysia, the other one is in Hong Kong. And quite interestingly is the Hong Kong one is actually trading at around 8 times price to earnings ratio, whereas for Penta Master in Malaysia, that one is quite a premium, about 30 to 40 times. So they are kind of like taking these semiconductor contraction when there's like lower demand, and they are taking this opportunity to privatize their HK unit. That is just a potential rumor. That is what has been going around, and you can see that they also did trade their halting for the Hong Kong unit. So there's a pretty high chance that they're going to take their Hong Kong unit into privatization. And if you guys didn't know, the Hong Kong one actually contributes about 60% of their earnings. I hope that I get that fact correctly, but if I'm wrong, please do correct me in the comments down below. But roughly around, it's either 40% or 60%. So assuming they manage to take it private and everything under the Malaysia unit, which means the shareholder can actually gain some extra profits from this privatization of their Hong Kong unit. Now, not only does this three company, there's also another company called ECA Integrated Solutions Berhad. It actually pumped up about roughly 30%. But if you look at their latest quarterlies, it is still at a loss making. So I'm not sure whether this is a turnaround or sentiment. Most likely, I'll say it's more driven to sentiment, but we shall see in their upcoming quarterlies, which is going to be releasing either this week or next week. And yeah, we'll look at the numbers, whether is it similar to Coraza, because Coraza also reported like a small, tiny recovery in terms of their quarterlies. That will be exciting to see. Now, not only just this technology and also the healthcare sector, another big cap guys like 99 Speedmart and also Gamuda is on the rise because of this KLCI inclusion. So you can see that there's two companies, 99 Speedmart and Gamuda is going into KLCI, whereas the one that is getting excluded are Genting and Genting Malaysia. And this is also why you see Genting and Genting Malaysia's share price has been going down. Institutional investors and also the foreign investors has been doing some sort of like rebalancing their portfolio. So they have to like sell some of their holdings in Genting and Genting Malaysia, and they are topping up some holdings for 99 Speedmart and also Gamuda. Now, what's interestingly also, more companies are still announcing dividends. Some of them actually paid about 8%, 6%, also 5% dividend yield based on this quarterly announcement alone. And most of them actually are going to be paying out this dividend before January 2025. So this is again to not pay the 2% dividend tax that is going to be commenced on January 2025. So I think there will be a few more companies that they will be announcing their quarterlies for this week. So and I'm pretty sure there is some of them also want to pay out more dividends, and most likely it's going to be paying before January 2025. So do look forward to it. Now, in terms of fund flow, this is the reason why bank stocks or financial service stocks has been on the decline. If you notice, RHB, Public Bank, Maybank, CIMB, and also Bank also, the majority of the people who is actually selling is actually coming from the foreigners. So there's a large selling between or exchange of hands between foreigners and also local institution. The only two companies that has been bought a lot is actually YTL and Top Glove. This is by the foreigners themselves. Whereas for retailers, they are still constantly selling out YTL Power and also Top Glove. And if you want to know the information on this fund flow, we actually recorded for quite some time already, since I think it was April to November 2024. If you want to know more information about this, you can check out Fire Pro. The links will be in the description and comments. Okay, so that's about it for today's video. And there's actually a few questions that you may want to ask. So number one is the window dressing. Right now, why the market is actually going up is because there has a lot of like rebalancing in portfolio, and essentially they just want to make their portfolio look good. So that's why in the past week, every single sector is on the green because there's this window dressing activity going on. This has been going around every single December for every year. And they will actually go through that kind of processes, and it's going to be just a temporary boost only. And as you can tell from today's recording, today's a Monday, the market actually start to like contract a little bit because I'm pretty sure they have been done with their window dressing. If they have not, then maybe another few more weeks you'll see another bumper in terms of the market. Now, number two is that there will be two major events that's going to be happening this week. Number one is the Bank of Japan. Most likely, they're going to be increasing their interest rate. But this one is still on proposal stage. They are still uncertain whether they want to go ahead with it. We shall have a look on the, I think it's on the 18th or 19th of December, where they will announce this December rate high. Now, another thing is the Fed is actually going to be cutting rate in December. I think they're going to be cutting about 0.25 basis point. So that's also is going to be another interesting outlook to see. You know, the Bank of Japan is increasing rate. The US side is reducing rate. How could it impact the market? I'm not too sure, but pretty sure it's going to bring a lot of volatility during that week. Now, the third takeaway is that I'm not sure what is really the catalyst driving the tech, because if you look at this WSTS report, basically they say that the categories like discrete, optoelectronics, sensors, analog, semiconductors, they will be expecting a decline. So these category are actually heavily manufactured or service, test or packaged by our OSAT players, ATE players. So we are more of the back-end value chain where we actually cater to the consumer devices, PC, your automotive, this kind of like pretty back-end value chain. So probably the reason why the tech pump is because of some of these. If you look at the names, right, it's all coming from the US. JF Tech, recently they can sell some stuff to the US, and also Hata Lega and also Supermax, they have some sort of like export advantage because they are heavily export into the US. But yeah, if you notice that recently most of these tech rally is because of the US, and they're also coming from the low base where they are reporting poor quarterlies for the past few months already. So there any new positive news actually kind of like drives up or bumps up the tech's share price. But I'm not sure whether these catalysts can sustain a lot, because ultimately you need to see whether they can actually increase their sales and profits. And to increase sales and profit, definitely does not need to come from these few categories. They need to actually go up the value chain and probably serve the memory and logic segment, which is projected to rise about 81 to 16% year-on-year growth for 2025. So I'm not
Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description.
sure whether this would be short-lived for this drive in tech, but we shall see in the next few weeks or maybe even months. Now, the last question, it is, will this rally last until January 2025? Now, January 2025 is going to be a very eventful year, because number one, the Trump's presidency will be coming into effect in 2025. And number two, our budget 2025 stuff also is going to be commencing. So your dividend tax rate, and also a lot of taxes will be imposed, your minimum wage and all those kind of stuff. But the main highlight here is Trump's, and because Trump and his tariff is definitely going to jitter a lot in the world market, especially for China, Mexico, Canada, Europe, basically essentially every single world. And I'm not sure whether this rally can actually sustain for January 2025. And this is also the reason why we created a lot of videos on about potential market correction and how can you prepare for such thing if it happens, because there's just too many uncertainty going around with Trump's policy and how he is going to work around with the world leaders. So, but we shall see, because this is all just macro view, and macro view are very uncertain and unpredictable. So anything can happen. Who knows? Maybe things will turn around. Maybe the tariff may not be as bad as what people thought, right? So yeah, we shall see, and we look forward to 2025. And before you guys go, this is the Fire Pro's portfolio performance. It has been the best month ever, 48.93% up for Fire Pro Malaysia. Our Fire Pro Global is down 0.94%, and our boring portfolio is up 16.11%. Now, spoiler, our Fire Pro Malaysia now is up about 50%, and the boring is up 18%. So if you want to know each of these portfolio, what does that mean is Malaysia, it's more of our best Malaysian idea. Fire Pro Global, it's we are covering all of the global companies, your China, Hong Kong, US, Vietnam, all those countries. The boring portfolio, so if you are a conservative and you're a dividend investor, you like cash flow, this is a portfolio maybe you want to have a look at. And so far, it has been, I would say it has been quite a good performer. 18% since April 2024, and we have outperformed EPF by multiple fold. So if you want to see what companies that we did covered over here, you can check out Fire Pro. And if you want to have a taste, you can read up our free sample. The links will be in the description and comments. From there, you can see how we do our write-ups, how we analyze company, how we assess management, how do we research on the risk profile of these companies and also management, and so much more information that is available there. So if you want to check it out, make sure to check the Fire free sample. The links will be in the description and comments down below. And that's it. I'll see you in the next video. Bye-bye.